I had to hop on here because Fannie Mae and Freddie Mac just made an announcement that's going to change the industry for the majority of investors. If you're an investor that buys properties and you use the BRRRR method, with the BRRRR method is to buy a property, rehab it, refinance it, rent it out, and repeat, that is no longer going to be available. And let me explain why. Fannie Mae just announced, Fannie Mae and Freddie Mac have imposed strict limits of 7% on the combined amount of second homes and investor-owned properties that they will buy, effective with loans that they are purchasing in April. So what this means, this affects anybody that's looking to refinance or cash out on a second home or an investment property. If you're an investor and you have a property in contract right now to buy, planning on doing the BRRRR method, you may want to stop. Definitely watch this video to the very end because this will affect your whole strategy and all your exit plans. Effectively, this is going to pretty much stop any cash out rate and term refis. Banks now can only have 7% of their portfolio in this type of product. So this announcement will cause mortgage lenders to have to sell many of the loans to private investors whose pricing may be several points worse than Fannie Mae and Freddie Mac's pricing. As a result, in the last 72 hours, many mortgage lenders and secondary market investors have worsened their rates by on these loans up to 1 to 3 points. So they're just going to make these loans so much more expensive that it's not really worth it to do, and it's going to really hamper things. So is the BRRRR model dead? This is something that the majority of investors use. They'll buy properties, and that's how they grow, is they'll buy and suck out their money back after they've done the rehab, get their money back out of the property, and go on to the next one, and that's how they grow as an investor. This is really going to affect smaller investors, people that have under 10 properties. And I'll explain why in just a second. So it has become more costly to do a cash out refi now, and therefore your cash flow will be diminished. And what this is going to do is this is going to push out a lot of the fair weather type investors, and it's going to create some great opportunities. So is BRRRR dead? I wouldn't say that it's dead, but it's probably in a coma for a long time. Who knows how long until this ruling is reversed. So effective with today's rate sheet, lenders will be adding 1 point additional fee to all refinances only for Fannie Mae and Freddie Mac loans. These are second homes and investment properties only. Purchase loans, jumbo loans, government loans, FHA, VA, and USDA are not going to be impacted by this. So in the coming days, as the mortgage industry digests this announcement this week from Fannie Mae and Freddie Mac, it is possible that mortgage lenders and secondary market investors could make further pricing changes on secondary homes and investment properties. The mortgage industry pricing of these types of mortgages could be very volatile for the next several weeks. As an investor, the first thing I thought of was, how are we going to get around this? Because we have a lot of people that we teach and a lot of people that watch this YouTube channel that are just starting out, and this is one of the core methods that a lot of people use to grow in the real estate business. And so how are we going to get around this? And there are ways, but it is getting more expensive. So the way to get around it is to refi. Instead of using a traditional lender, you're going to use a portfolio lender. And a portfolio lender is somebody who keeps their loans in-house. They don't sell their loans to Fannie Mae or Freddie Mac, so they can do whatever they want. Also, commercial loans are also going to be a way to get around this. But the problem is, with 70% of the market being regulated out of this niche, those commercial lenders and those portfolio lenders are going to get all of the business, and their rates are probably just going to go up just because of supply and demand. Long story short, we're going to be seeing higher rates for investment properties and second homes. We're going to see lower LTVs. With a residential loan, you can count on a 30-year fixed rate mortgage. That's not the case with commercial. A lot of times you're on a 20-year amortization schedule instead of a 30, so your payment is higher. Your rate is going to be a little bit higher, so your payment's higher because of that. And the rate is only fixed for about 5 years, and usually there's a balloon in 10. So it's a totally different product than a 30-year fixed mortgage. Not as stable, not as predictable, but as an investor with over 10 homes, this probably won't affect you much because you're already in the commercial space. The bright side of this whole situation is there's going to be less competition for investors that can figure out how to work around this, because a lot of investors will just kind of fall away and won't do this because it's getting too expensive. The other upside is a 20-year amortization schedule. It's kind of like a forced savings account. You're going to pay less in interest over the life of the loan, which can be good. We've talked a lot about the housing crisis in the country, how there's just not enough housing stock for the amount of people that are here. This is going to help help with the owner-occupied purchases, and there'll be less competition for those, so that will help a little bit with the price increases, slow that down a little bit. But I wouldn't be surprised if we saw more regulations like this, limiting investors or limiting niches and things like that and different loan products. It sounds like they're going to be tightening up on some things. With the single-family residential mortgage market getting tighter and harder to invest in, I think a lot of these investors are going to move over to multifamily, which is going to increase the demand on multifamily, which is going to increase the price and lower the cap rates and things like that. So you're going to see a lot more competition there, I think. So in the end, there's always a workaround for these types of things, and you're just going to have to get better at buying properties, and I think those deals will get better as the competition lightens. But this enacts in 2 weeks from now. So you've got 2 weeks to lock something up before this goes into effect. So hopefully this helped, but I wanted to get this out there before you bought a property and got into a situation where you're not going to be able to refi it out down the road. So I'm sitting here at a house that I'm building right now, and it is a beautiful day here in Arizona, and they just got done pouring the slab, as you can see behind me here, and so we're just getting ready to start framing. So it is a beautiful day, and I thought I'd do my video outside just for a change of scenery. So I thought I'd do my video outside just for a change of scenery.